The job market in the Inland Empire is finally showing some decent momentum. Does that mean that the apartment market is kicking into gear? Not really. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Riverside San Bernardino update. Let's start off with the employment story. Annual employment growth in Riverside, San Bernardino is at the best level seen since 2006, with 25,400 jobs added in the year ending third quarter 2012. That amounts to a very healthy growth rate of 2.3%, the 20th best growth rate among the nation's core 100 markets. Very encouraging to finally see some meaningful progress in the metro area, but still a long ways to go. Compared to pre-recession levels, the Inland Empire is still down more than 100,000 jobs, or more than 8% of its workforce. So by that measure, it's one of the 10 weakest markets in the country. But at least we're finally seeing some upward momentum in jobs, and that of course is translating to more demand for housing, but much of that demand is going toward single-family homes, either single-family rentals or toward purchases. Lots of distressed homes in that area. Many of them ended up in the hands of investors, and many of those ended up back into the rental pool as the investors wait for prices to rebound. So apartment demand continues to be tepid. Here's a look at quarterly apartment demand over the past few years, and you can see that demand has actually dropped off even with the improvement in the job market, and even though there's still plenty of vacant apartment product, consistently mild over the past 4 quarters and just 333 units absorbed in Q3 of 2012. So as a result, occupancy has been stuck under the 95% mark for the past 5 quarters, coming in at 94.7% as of Q3, down 10 basis points in the quarter and up 10 basis points year over year, very little movement. And consequently, there hasn't been much rent growth. Year-over-year rent growth registered at just 1.7% as of Q3. That was a 6-quarter low. But even the peak in this past cycle wasn't much compared to what we've seen elsewhere in the country. Rent growth registering as high as just 3.1% a couple of quarters ago, and the Inland Empire has come in below the U.S. average for annual rent growth now in each of the past 25 quarters. And we break down the metro area by product classification or by submarket. There really isn't much that stands out, but there is one submarket that has done consistently better than others over the past year or so, and that is the Redlands area. Occupancy as of Q3 came in at 96.3%, up 50 basis points year over year, and rents are up 4% year over year. We also see some good occupancy rates in places like Rancho Cucamonga Upland and also the Temecula Murrieta area, but we're just not seeing much rent growth in those spots. And as we look ahead for the Riverside San Bernardino area overall, it takes a lot of optimism to imagine this market getting much better in 2013. The problem is there's just so much single-family rental product on the market, and now that home prices have stabilized, the apartment market is also in danger of losing some of its best renters to home purchase. And so 2 factors are going to make it tough for the apartment market to gain much progress over the next year, and we think that rents are going to climb just 2% for the apartment market over the next 12 months. And that wraps us up for the Inland Empire. So until next time, for MPF Research and Apartment Market Dynamics, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.